Well, hello everyone. I'm here with Harpal Sandhu, the CEO of Integral, a company I used to work at for a few years actually, and I had a very, very good experience and learnt a lot here. And Harpal is in London on a trip from the usual home base of California, and he's here to talk about the new product from Integral, which was launched about 2 months ago, called Prime One, which is very focused in the crypto space. We're going to learn more about that shortly. But before that, Harpal, if you wouldn't mind just giving a bit of an introduction about Integral, what the company does, and what kind of clients you serve.
Yeah, happy to. So, first of all, we're very proud of our alumni. So, congratulations on all of your success and how broad and successful LiquidityFinder has become. So, as you know, Integral is a technology company. We are singularly focused on solving our customers' problems and being their trusted technology partner. So today, Integral supports about 250 institutions around the world where we offer a subscription-based, so there's no volume charges to our customers, a subscription-based, cloud-based platform run out of 4 data centers in New York, London, Tokyo, and Singapore, where we really run their end-to-end OTC trading operations. So FX, CFDs, and crypto, where we give them access to liquidity in the markets, form their prices, distribute them to their customers, manage their risk, and help them with settlements. So it's a great time in the market now. We have very close relationships. Average tenure of our customers is greater than 10 years, and it's been a great ride.
And there's also a white label aspect to the product as well. So a bank or a broker can take the liquidity from the central market on the Integral platform and then white label that out to their customers with their own branding.
Exactly. The core of what we do is helping people run their businesses. So it's always under their name. It's always under their branding. It's in fact also always their liquidity. So although we may maintain the market is essentially a series of bilateral OTC relationships that exist out there. These are managed by the customers themselves. We merely facilitate the infrastructure on the platform, and in a way, we're their trusted technology partner. It is their business. It always remains their business, and that symbiotic relationship has really worked out well.
Okay. From my experience, we are seeing, much like you are, traditional FX businesses moving into crypto, and vice versa. We're seeing crypto businesses moving into FX, and there's a convergence going on. We were talking about that yesterday at the Finance Magnate Summit, and I'm sure you were having conversations similarly about that. And there's a very exciting product that Integral has launched about 2 months ago, which we're here to talk about, which is Prime One, which is based on your not insignificant experience in crypto up to now. So you've been in crypto as a firm for a few years, offering aggregated crypto pricing, both spot and CFDs, if I understand correctly. And Prime One is the result of quite a lot of hard work in the background, connecting to various exchanges and market makers. But if you can just give a bit more of a explanation as to what Prime One is solving for the market, and what the potential client can achieve using the Prime One platform.
Exactly. First of all, we serve customers. Our clients are in the business of offering products to their customers, and we react to those asks. The primary ask that happened about 5 years ago was, they wanted to extend their product set into crypto. The initial extension was done through CFDs. We massively expanded the number of CFDs that were available to customers through that. But as you know, CFDs are non-settling products. They act a lot like FX, and that's kind of a straightforward process of adding that in. Moving into spot crypto markets is significantly different, and the issue that we had a few years ago was that in the FX markets and in the CFD markets, we rely on infrastructure from banks or B2B brokers that supply the liquidity, but more importantly, supply credit and supply clearing and settling for those products. Spot crypto had no support from banks, had no support from really any of the traditional finance markets, and we had to if we were going to offer the same level of integrated product solution to our customers, we had to fill those gaps. And those are pretty significant gaps. So we invested probably 5 years now of building an entire technology stack from a layer 1 blockchain protocol all the way up through full integration to our core trading systems to allow our customers to, end to end as we are doing in FX, have a single API, interact with our systems in exactly the same way where they can source spot crypto liquidity, create their own spot products that they offer up to their customers, execute those, distribute those products, execute those, manage the risk, hedge those, and settle those products at the end of the day. The same offering we have in FX is now available in spot crypto, and it's a very different world. It's a very different world. But we're quite proud of the fact that after all these years of effort, around 8 weeks ago or so, we came public with what we're doing, and it's really quite interesting.
Great. So my understanding is you've got connectivity to most of the major exchanges and most of the major market makers. Do you want to talk about that in terms of what that looks like in terms of the liquidity in the platform today, and what that might mean for, let's say, a B2B broker that is moving into the spot crypto space? Because my understanding through the conversations I'm having is that a lot of B2B prime of prime brokers have an existing CFD product, and that's fairly standard. But there's demand from their customers to offer spot products, and that presents a lot of challenges. You've got to have a lot of different API connections to exchanges and market makers and so on. And in some cases, people are doing that individually with each single market maker or exchange. I'm assuming that Prime 1 removes that requirement, and there's one environment that they can operate in where all of that connectivity is provided.
So if you think about everything that's required, we break it down into three layers. The first layer is trading, which is connectivity and what we were just talking about. The second layer is credit, to be able to access all these places. Then third layer, settlement. So yes, we have invested heavily in point-to-point connectivity to allow brokers to aggregate liquidity from all of the actual sources of cash spot crypto liquidity. So we've now integrated upwards of 28 major crypto exchanges, 10 market makers, and we think that represents 80-20 rule about the market. Customers can pick and choose exactly what set of liquidity they want to set up with. So even outside of Prime 1, outside of using Prime 1's credit infrastructure, Integral's core systems allow them to set up bilateral relationships with those points of liquidity in the market, exactly as they would in the FX market, have accounts there, trade with those parties, and help them for end-of-day settlement with those parties.
So just on that, does that mean that somebody can choose their counterparty in the platform? Is there visibility?
Absolutely. As a technology provider, it is their system. They can trade with whomever they want, how they want to trade with them, open accounts wherever they want. If we don't have a connection with a particular exchange, we will do that. The 28 or so exchanges that we have now are as a result of customers asking us to make those connections. So all of that works, and that is sort of Integral's traditional business. I think where the huge sort of value add in Prime 1 came in is that if we look at the FX markets, even though people have all these bilateral relationships, people have grown quite familiar with the idea of using a prime broker, where you might trade with multiple counterparties, but have those trades given up to a common credit entity, if you will, and then look at your positions as a net position and settle your positions on a net position or roll them, depending on the prime brokerage model that you're using. We've essentially delivered that in crypto. So let me be clear about this. 35 points of contact, for example, crypto exchanges, crypto market makers, spot markets. Customers can trade bilaterally on a fully disclosed basis with those parties, and on a real-time basis, those trades are given up to a central credit facility where they see their net open position on a net basis across those parties. Okay, again, so be very clear. Open a position with one exchange, close a position with another exchange, have a net zero position, you don't have to do anything. To the extent you do have an open position at the end of the day, your net open position, in the case of spot crypto, where you choose and want to settle those positions because you may have an obligation somewhere else, there's a net settlement cycle, a daily net settlement cycle at the end of the day, where you settle on a net basis one time with the network, and the network nets out all of the positions across all of the parties. So, one API connection, one account, one net open position, one settlement cycle.
Nirvana.
Well,
I love using that word, and sometimes I have to use that word, but it does sound like it's the full market is available in one.
We thought if we were going to do this, and we are engineers, and it's a very complex problem, we would invest the time and energy to do it right. And if we could do it right, we think it would make a dramatic difference to how our customers run their operations. And again, if you're coming from a non-delivered, rolling spot kind of environment, non-settling, and entering the cash crypto markets, the spot crypto markets, where settlement is the expected cycle that people go through in trading these products, it's a huge change. And it wasn't going to be possible for our customers to easily do this without a lot of work. And when we look across our customers, it just didn't make sense for everybody to be doing this work individually. That's the role that we play. I mean, why should everybody build their own connections to 35 or 50 eventual points of contact? Why should everybody build up their own position rebalancing technology? Why should everyone build their own custody technology? Why should everyone build their own settlement and clearing technology? That is exactly what we have been doing, building things once that people could use multiple times. And when we apply it to this particular space, given how big the gap is in built-out functionality within these firms of where they are and where they need to be, we think the timing is right.
One of the things that I find very interesting about the crypto market compared to FX, I mean, FX is all in one of 4 data centers, let's say London, New York, Tokyo, Singapore in your case. The crypto market is distributed everywhere, right? And so where does somebody connect to you? Do they connect to you in London, like Equinix, as before with FX? So you'll bring all those connections from?
Our core data centers are still in the main Equinix facilities in New York, London, Tokyo, Singapore. You're right, crypto points of liquidity are all over the world. In many cases, they're actually secret. They're hidden, they're running in AWS, they'll have a point of presence somewhere, but you don't actually know where the matching engine is. There's no easy answer to this. What we have decided to do is to give our customers the ability of cross-connecting to us through a point of presence in either of these 4 locations. And really it's a question of where their customers are, so that there's the least amount of latency between, in essence, the broadcast site of their own going out to their customers and one of our data centers. The growth is all over, but really it's London and Tokyo actually where we're seeing the biggest growth right now.
Because relatively speaking, the FX market is fairly straightforward because everybody's in the same place. You cross-connect and it's all kind of all done. So I have a lot of admiration for companies like yours that are doing this huge network of connections to places which aren't all in the same regions. Then that brings me on to my next question. Are DEXs involved in the platform or not?
They can be, and we have integrated a number of DEXs in there. I think in order of priority, centralized exchanges for spot crypto is the deepest liquidity that exists today, and we've spent the most effort making sure that is the core of the liquidity. Close on the heels of that are market makers who do their own excellent job of aggregating liquidity and also being a principle behind some of the liquidity in the market. Next along that is additional types of crypto instruments that are out there, namely perpetual futures, which have rapidly emerged as a point of liquidity. They have their own complications, as a lot of your audience will know. And then also DEXs. DEXs play an extremely valuable role in terms of the long tail of crypto products that are available. But by their very nature, the advantage of anonymity, the advantage of trustless environments and so on is great, but then the disadvantages are latency, depth of liquidity, various other things that we've all learned about over the years. So we have them in there. There's a particular use for it, and customers can pick and choose on the products they want to offer. What sources of liquidity they'll include in their mix.
Thank you. Now, in terms of the B2B broker, prime broker that's looking to service this sector more completely. So I'm hearing that there's a big move towards this in 2026. We're going to be hearing a lot more about B2B primes moving into this space. If somebody's kind of a little bit late to that party, but they want to get moving quickly, I'm assuming that Prime 1 is I hate to use the word off the shelf, but it sounds like a relatively simple way for somebody to get a spot crypto product.
Well, that is exactly the intent. If there is if somebody wants to enter the financial intermediary space of aggregating spot crypto liquidity from major exchanges, from major market makers, form a price, offer that price up to their customers, and at their option, either settle or not settle those positions, both with their customers and with the counterparts in the market, that is exactly what a Prime 1 offers.
Okay. And if, let's say, not even a B2B prime of prime broker wants to get involved, but a crypto native firm wants to get involved, and they want to access this market and then potentially white label this to their customers, is that possible using Integral's technology, or is it not white labelable yet?
It is white labelable. Everything we're doing is for our customer. And if our customer wants to take that functionality and that technology and put their own name on it and put it out into the market, it is specifically designed to do that. I will tell you an interesting phenomenon. We've been working on this product for the underlying technology for about 5 years, the actual Prime 1 piece of it for about 18 months, the credit layer. We really believed that it was our 250 odd, FX-centric brokers and banks that would be our core market for, as they were moving into, the crypto asset class. It is really astonishing that where we started out 50-50 in terms of our pipeline for the product 8 weeks ago, it is already 80-20 crypto native.
I'm sorry, why is that? Is that because they're underserved by existing technology?
It's because they understand how difficult their life has been, even though they are already in the market, even though they have already done all of these things. For someone to take that off their plate and for them to focus on their core competency, which is marketing, getting their customers, working out their risk management, working out all the typical things that we've done in the FX space, they love it. Because they look at it and say, that's not our business, but we were forced to do this over the last few years. Yeah. And in fact, they are a very sophisticated group when it comes to technology, plumbing, latency.
But there's a huge overhead and all that, right? So they can just...
Basically, they are taking a very complex environment that they operate today and refactoring it down into a very simple implementation. So they appreciate their Nirvana more than anyone else. And we're learning a lot from them. Much of what I'm telling you about today in terms of the points of contact that we built out in the market, the functionality that we're supporting and so on, is really us porting their systems over. It is their points of contact that we are onboarding, which again, I think for historical FX brokers coming into this market, it's a pretty big advantage because you're essentially getting best of breed of the crypto native firms being refactored into a credit intermediated, rules-based, cloud-based supported platform that's of the standard of FX, but including all the functionality and a lot of the built-in knowledge that the crypto native firms have built up over the last many years. So it's a pretty interesting mix, and we've been pleasantly surprised by how receptive they've been.
I mean, I think this goes back to the point I was making before that crypto firms are getting involved in FX and FX firms are getting involved in crypto. And there's a crossover of personnel. So there's experience and talent going from the native crypto world being hired by FX brokers, and it's actually going the other way as well. And this convergence of FX and crypto, where's this all going to go, Harpal, do you think?
You know, it's a very interesting phenomenon. When we talk to either one of the markets, it's quite interesting that we find that either one of the sides actually doesn't know the other very well at all. We operate in both, and so we see this. I'd say my first observation is that crypto exchanges, for the most part, are not exchanges. They are brokers. No one ever told them that, and when we tell them that, they get kind of confused and so on because they call themselves exchanges and they like that terminology. But the fact is, exchanges don't normally have market making groups. Exchanges don't have dealing desks. Exchanges don't have white glove OTC desks and so on. I mean, they're not supposed to be principals. Crypto exchanges are principals in the market, and brokers are principals in the market. So I think to some extent there's going to be a convergence. I think crypto exchanges are going to decide whether they're a broker or they're an exchange. And I think FX brokers are very talented at what they do. They know they are brokers. They know the role that they play, the value proposition they have. And I think as they enter crypto markets, they're going to bring a level of expertise that crypto exchanges, I think, will be very surprised by. It's my opinion, but I would actually say FX brokers grew up in a world that was a lot more competitive than crypto exchanges have. Crypto exchanges may have a lot of capital today, but it's because they charge 100 times or 200 times the amount of margin for the work they're doing. I think as the FX brokers enter the space, especially if and when they enter it with traditional finance infrastructure from companies like Integral, they will make a meaningful impact, a very meaningful impact in terms of capturing and keeping customers. I think FX brokers' marketing ability, I think their customer service ability, I think their technical abilities, have 20 years of history, 25 years of history in it. And crypto exchanges or crypto brokers don't have that. And I think if we can cross-pollinate the information from the crypto native world into the FX broker world, as the FX brokers offer customers spot products and eventually derivative products and non-settlement products with the same level of robustness that they have done in the FX markets, I think it'll be a very interesting world 12, 18 months from now.
And do you think there is a significant market opportunity for FX brokers to get into this space?
I mean, how could there not be?
Yeah.
Customers are interested in the product. Customers are used to paying relatively high prices in terms of spread and commission for accessing these markets. Much the same way that we, as a traditional finance technology firm, enter the crypto space and people think we are geniuses, like a Back to the Future type of situation when we talk about fixed protocol, and they're like, fix what? What's broken? It's really astonishing that they're for all of the success in crypto, they're actually quite far behind in some of the things that we have matured over the last 25 years. So I think in the same way that technology, TradFi technology coming into crypto is going to leapfrog a lot of things, I think TradFi FX broker technology, whether it's marketing, support, scaling operations and so on, is going to leapfrog quite a few things. And I think the opportunity is phenomenal.
Great. So on that basis, how does a broker operate with Prime One? How do they contact you? How do they get going? What's the next step? If somebody's interested in taking this forward, what do they need to do?
Well, existing customers have already been reaching out and we've already been working with them. The beauty is they can reuse their existing fixed connections with us. If they, for whatever reason, want to migrate towards REST and WebSocket-based API connections, they can do that. If they want to enhance their front end to have a more crypto-native looking front end, we can talk to them about that. All of these things are white labelable now. They should just reach out. They reach out to existing Integral relationships that they have and say, hey, we want to talk to you about Prime One. We want to talk to you about expanding into crypto asset class X, Y, and Z. Here are our plans. We work in a very consultative, sort of closely aligned manner with our clients. It's a very transparent, informal relationship during this design phase. People reach out, we talk.
Like a discovery process.
Yeah, there's a discovery process. We show them what we know, what best practices are in the market. The pricing models are very simple. All of our trading systems and so on are totally subscription based. There's no volume cost associated with it. They can start out small and scale it out. And we can just show them how everything works, and they can pick and choose what they want to do. A lot of them ask questions. What are other people doing? Look at best practices, decide to phase in the deployment as their business scales. And I think that's the best way of going forward, because there's a learning process on both on their side, and we help them through that.
Basically, get in contact, and they can do that through us, and they go straight to the team at Integral, or get on the website, get on the phone to Integral in London or the US. And where can people meet you over the next few months if you're going to be going to any of the events, like in the crypto space? Or
Yeah, since the launch, which we actually did at a crypto native event, Token 2049, we basically have spread out, and we've made ourselves available all over the world. So we'll be doing traditional FX events. We'll be doing a number of the crypto events, Consensus, the blockchain weeks that are going on around the world. But the straightforward answer is you just send us an email.
Yeah.
They can send an email directly to me. They can send it to any of their relationships or contacts.
Or via LiquidityFinder.
Or via LiquidityFinder.
Yeah.
At the end of the day, we all know each other. We're entering, sort of a brave new world of opportunities. There is no straight line. It is a learning process for everyone. The bottom line is to reach out, start that conversation, think about, what your goals are, and together, we're going to get there. I think it's going to be a lot of fun.
You are going to have a very, very busy 2026. I wish you all the best.
Thank you very
much. Thanks a lot for your time. Cheers.
Take care.
Bye-bye.